think, act, and prosper. You are now tuned into the Money Level Show.
Hey, Peter, thank you for joining me again.
Always a pleasure, my brother. I really look forward to speaking to you. And I don't say that to everybody, so I don't want you to think that's a cliche.
No, I really appreciate it. I mean, I was down with, I was down with COVID, and I was out, and I took some NyQuil because we had this scheduled a couple weeks ago. And I took some NyQuil, and I was just put out. And then I woke up at about 10 minutes past our interview time, and you're like, "Hey, I'm in the waiting room."
Oh,
And
that's all right. Don't worry about that.
and then but it was just a testament to just the brotherhood that we've built doing this and sharing the same faith. And I was like, okay, Peter got me. So it was good.
Not a problem. Glad to see you up and around.
Yes, indeed. Yes, indeed. So I want to jump into gold. It's a beautiful thing to see. We've been seeing all time highs in the price of gold measured in dollars. And I mean, currently today, looking at the chart, we are at about $2,317. And um, you've been talking about gold for a long time, and we're gonna get into the equities at some point. But what are you seeing in terms of why are we getting such a huge price increase over the last 6 months? I think back in October last year, we hit about 1900, and then we bounced and pierced through the all time highs. Finally, what are you seeing contributing to this rise in the price of gold?
So I had left the gold market and returned after quite a few years away from it when it was around 1200 to 1250. And I really got back because a young lady who's well known in our field that does financial journalism asked me to come and speak because she heard that I had gotten back. I gave up on conferences and newsletter writing and all that stuff. And I said back then that this really can, within 10 years or less, trade to at least 2,500 because the monetary systems were getting out of whack. We were already at that point in serious debt. Now we're in horrific debt when that's just, it's beyond horrific. If there's such a word, we'll take the next word after horrific. And so I had the presence of mind to focus on gold, which I did. And then at the end of 2021, I did something very unusual, and I didn't suggest people do it, but for myself, and I disclose everything that I do, I decided to sell all equities that weren't related to natural equities and put it in gold. And people, are you crazy? And of course, the younger people, gold's a relic, gold is this, gold is that. But here's the bottom line, and then we can go from there. From January 1st, 2022 to today when we speak, gold has outperformed the Dow, the S&P 500, the NASDAQ, and bonds. And only just last day or two did I take some profits in the physical bullion in order to get more exposure to things related to copper. So gold has been the most disrespected but tremendous performing asset in my 40-year career that I've ever seen. That's something that's done so well. I'm telling you right now, not 0.5% of American investors have any real exposure in it. And it's just it's a classic missed opportunity, which now people will find themselves, well, now that it's run, what do I do? What do I do? And you have to understand why it ran. And it's always easier to be hindsight. This is much easier at this point to talk to you. The one over dominating factor that you and I have spoken and several other people have been talking about, central banks decided, for reasons I think we're only going to know in the next several months to a few years, to amass a huge quantity of it. And I've said this all along. They're not doing it for a trade. They're not doing the speculating in it. They're minimally doing it to diversify out of U.S. securities, U.S. treasuries, and the dollar itself, and potentially, particularly the ones that are joined or plan on joining the BRIC that someday there'll be some reason to have gold involved in whatever new monetary system that eventually replaces the dollar. And that alone was reason to own it. Then, of course, there's been other reasons. There's terrible things that are going on in the Middle East now. The Middle East is truly a tinderbox. It's not being spoken yet in the investment community the way it should be. And that's because a lot of the younger folks never got involved with geopolitics and they don't understand how that would be impacted. But it's not anywhere as cheap as it was, obviously, when it was 1,200 and all. But to anybody who thinks that the run is over, I would say the real fun is just before us now.
Time out. Quick break in the action. This message is brought to you by the Rule Symposium. This annual symposium is hosted by the legendary investor Rick Rule himself. It will take place from July 7th through 11th in Boca Raton, Florida. Mr. Rule invites some of the most brilliant minds in macroeconomics and natural resource investing. This year, featured speakers include Danielle DiMartino Booth, Nomi Prinz, Jim Rickards, Grant Williams, Lobo Tigre, and more. Rick even organizes the Living Legends panel where he invites individuals who have built billion-dollar businesses from scratch. Attendees will be introduced to a myriad of companies active in the natural resources space, with the companies invited being the ones that Rick Rule invests in himself. The symposium is held at the Boca Raton, which is an amazing resort with exceptional amenities. I attended in 2023 and thoroughly enjoyed my time there. I went on an amazing cruise with Rick and other investors and CEOs of companies, and even had the opportunity to test drive an Aston Martin for the first time. So don't miss out on this opportunity to have fun and receive high quality education to help secure your financial future. Click the link below to sign up, and I promise you won't regret it. But if you do, Rick offers an amazing money back guarantee. So what are you waiting for? Click the link below to sign up today. Now, without further ado, let's get back to the content. Yes, that's really great points. I'm gonna go ahead and share screen. Before we got on, I was looking at the World Gold Council's reports on central bank buying of gold. And here we have over the last 2 years, 2022 to 2023, there's this massive amount of tons of gold, over 1,000 tons being bought, and these are just reported. These are reported purchases. There's obviously unreported purchases as well. But just looking at, even 2010, we were in a bull market in gold. Around that time, I believe gold had risen to close to $2,000 an ounce. I think it was like 1,800, 1,900 around that time before you had this blow off top. But central banks were not buying as much gold back then as they are now. And so what you're saying is testament to the rise in the price of gold.
Well, what's really interesting about that chart, Darrell, is if you had before 2010, central banks for well over a decade were net aggressive sellers of gold. That's how dramatic it was, that not only did they flip from being major sellers, but they became such aggressive buyers. And I still get a lot of people, because the younger people that pick up or read my stuff keep telling me what a relic I am, and Bitcoin is the only thing for the future and all. And my view is, if and when the central banks start buying Bitcoin, that's when I'll give it the legitimization of possibly being something that the world is going to be greatly involved with. But right now, central banks are focused on one market and one market only. And remember, it was not too long ago, can't remember the exact year, but not too long ago, when it was made into a tier one asset. So there's only three tier one assets in the world: stocks, bonds, and gold. And people forgot that. And I've always said this, and I said it with you, and sometimes people maybe get tired of it, but I've always said this since the day I began working this business 40 years ago. Wall Street treats gold like kryptonite. They don't want to go near it. And the main reason they don't want to go near it, because it flies in the face of what they basically sell. You can't expect someone to buy large quantities of gold and load up on stocks and bonds and think they're all going to do good over time. because one goes into almost direct conflict over a long period of time. So it's never had and never will have the benefit of the general investment community speaking about it. And that's why a lot of people are so under invested in it and have missed this great performance.
Yes, yes. So um, looking at silver, just transitioning to silver. So we have gold that's been performing massively, all time highs. Silver still far off the all time highs, but we have been getting a price rally there. And I mean, currently, just looking at the chart for silver, I believe we are at about $27, and this is one thing with silver that I would say is that I've had trouble with is that silver is so volatile, right? It's so volatile. Like right now, silver's at $27. You can wake up in a week, silver could be down to $24, right? Versus gold. Gold isn't as volatile as silver. What are you seeing with the price rise in silver? Is this because of normally when gold rallies, silver rallies after, like investors pile into there? Because obviously we don't have um, the same type of dynamics of central banks buying silver, or I mean, then silver has the industrial use, and then there's arguments whether like we're in the right environment for industrial use of silver and copper and base metals, right? So what do you contribute to the price rises?
So you hit on a few of them. The first is gold has moved so much and is broken out, along with some other metals. If you can put that chart back up, I wanted to note something when you had it, Daryl. But so silver is in a sense playing catch up. Uh, Obviously, the gold market, the copper market's breaking out, oil, commodities in general. So I think finally silver got the attention that it deserves. I've never, and it always got the silver bugs really upset at me. And I'd always say that it was second in my book, always to gold, for the very reason that you pointed out. It didn't have the monetary kick. And we've seen now what the monetary kick has done for gold. The reason I asked you to show that and why I think silver is just starting to go now and why probably not to say it's going to totally catch up with gold's percentage gains, but I clearly think $30 is in the cards. And the reason is I can't see at the bottom when you were at 17 and a half. I don't know what time frame that was. Could you raise your chart a little bit more? All right, so we're looking back at last July of 2022. You look, see, you made a bottom at 1750. What I think a lot of people should focus on is just like gold was doing and why I stayed bullish on it, it just kept making higher lows. See on each pullbacks, it never went as low. That's like a band. Now, of course, it's up at somewheres where there's resistance now, and some of this in the 27, but clearly $30 is probably the price I would look for the run in this. And one thing about it when silver goes that you can't even say about gold, it goes. I mean, and it goes back down that way too. But it really, really goes. And fair play to it. And I'm not talking about the people because I've been around. There's still guys out there that 35 years ago were telling me it was going to 100 and 200. I guess like a broken clock, they'll eventually be right. But one thing I can say here that silver has much better fundamentals now than it ever did in my career because there's so much more industrial uses for it now. And because mining in general has been in such a decline for well over a decade, there's not a lot of ample supply or places where people could turn key a mine, open it up, and deliver a lot of silver to the market. So it's finally, and it's probably also suggesting this that it should be the last thing that moves in the first stage of the overall move. So that would say to me that gold's probably going to consolidate not anywhere near 2,500, but somewheres between 2250 to whatever it peaks here, maybe 2350, maybe even touches 2,400. But I think what people are seeing here and for silver is it's having its day, and its day is far from over at this point.
Yes, yes, that's really good. And And so I know like back in 2021, we had the Wall Street silver crowd. We had this Wall Street bets crowd get in and wanting to drive the price of silver higher. It did go higher temporarily, and then we saw a sell off and just pretty much a bear market, since then. And so would you say, is it fair to say that now um, this isn't just driven by just retail demand or short term price pumps. This is like a more sustained rise in the price of silver.
Yeah, the other thing that you and I have spoken about, and I've spoken in general about it for quite some time, is the other bullish factor for both gold and silver is that the control or the paper hangers or the paper manipulators or whatever anybody wants to call them, that basically dominated London through New York has dissipated and almost disappeared because physical trading, especially for gold, is now dominated in Asia. So the paper hangers or the influence of the paper market is not what it once was. In fact, they've been basically non-existent for several days or a couple of weeks because they've just been overpowered. The physical man, that's why we keep seeing China and Asia having such a large premium of this price from what the same time that it's traded in New York or London, which is telling you where all the action is. You can only get away with charging the premiums. And one of the reasons that I knew this is a little insight for us to put back because you'll be young enough to see another cycle. I won't. But another 10 or 20 years, there'll be another cycle there. Another indication that there was true physical demand that people didn't want to talk about, the markups that the people who were selling bullion were getting this last year or so. I mean, some things were marked up 20, 30% in regular, not numismatic coins, just physical bullion coins. And people were paying it. And you can only get away with that when there's true physical demand. And that was a really good another indication. The best way to describe it, Daryl, is it's certainly not early anymore. It's not like it was a couple years ago. And we were at 1650 when we pulled back a couple years ago, and I remember all these articles showing up on Kitco and all about, oh, we're going back to 1,000, the run is over and all that. It was too cheap then. But like I said, there's still a lot to go. And I know you want to get to the shares. The place that's really still ripe for big gains is in the actual shares because they underperformed for so long. In fact, they performed so badly, Daryl, that for the first time in a 40-year career, not only was I on the wrong side of a bear market, but badly wrong. And thankfully, in these last few weeks, it's starting to dissipate and not remind of what it was. And but they still have such a far way to go, not only based on historical means, but just how badly there's a lack of real new potential resource to come into the markets on a variety of metals, gold, copper, and others. And so probably going forward, and we've seen it the last several days, shares are going to outperform the actual bullion for the first time in a couple, 2, 3 years.
Nice, nice.
Please
Yeah,
God, please God, Howard. That's I
yeah,
have to say that way. Okay?
yeah.
Sorry, I'm not supposed to invite God in for my investments, but it was that bad that I had to resort to that.
Hey, well, gold and silver is God's money. I mean, the Book of Genesis, and God saw in the land there was gold and it was good, right? So gold has always been around thousands of years, and it's like, hey, it has some validity to its value. Um, so we just transitioning into shares. Obviously, we saw. I mean, you on your Twitter, you post a lot of memes about the price of the shares, and sometimes ripping your hair out. You may post a meme of someone ripping their hair out and things of that nature, right? So you were going through some torment for a while, and so it sounds like you got a bit of relief. And how did this play? Is this similar to any previous cycles, where the physical moves first and then the shares, or like how are you seeing that? Or is this like a new type of regime or situation that we're in?
It was nothing like I've ever experienced in my 40 years. And you still, if you read a lot of the folks that were still around that spoke about the junior resource market, I felt at times I must have been the only one losing because they didn't seem to mention some of the severe downside that occurred. But nevertheless, this has been a unique situation. One thing I'll say again that we all used to say, and I say all of us that were speaking at the gold shows in the 80s and 90s, right up to when I stopped in 2014, there was a saying that we said, and I guarantee you, I'm almost certain we won't hear anybody say it again, just like you'll never hear the Fed use the word transitory again. You're not going to hear this sentence, which we used to say all the time. Hey, Mr. and Mrs. Jones in the audience, owning mining shares is just like owning gold. Not the case anymore. We learned that the hard way. I did anyway. And but to flip that, because of the real neglect of, you had here these politicians up until recently for a few years talking about how the whole world's going to be electrified. Everybody's going to have electric cars. Everything's going to be this, that. And they put the cart before the horse because people were trying to tell them in the industry, well, you're going to need all these metals, and they're not out there. There isn't. That was one of the beauties about copper. Normally, people are right when economy slows, it should have fell. But one of the main reasons copper didn't decline like it used to be, because there's no real supply out there. And we see this across the board in several different metals now. And it's not something that even if a ton of money is thrown at it tomorrow, that you can just find it, develop it, and bring it to market. And so I think the severity of the decline, especially the last few months of last year, and then thinking it would all be overcome January 1, and in early January, it was the last of the bloody towels were thrown in. That market has been so cleaned up and so beaten up. There's not a lot of overhang because so much of what was bought at much higher prices was just bailed out of. And so a lot of these shares from the majors right down to, the small juniors have opportunity. Now, there is one asterisk I would put with that. Because of the severity of a couple years, some juniors basically ran out of capital. And while it was impressive to see in the last couple of days, companies announced placements and then the sizes were doubled overnight. American Pacific Mining comes to mind. On Gold, which is a spinoff of Northern Superior, companies I'm involved in, suddenly announced that placements that they announced doubled in size. And so money's returning back, which is a good sign, but one day doesn't make a market or 1 week doesn't make a market. But the shares really are cleaned up and really can move substantially. Now, some of us, I was a big believer in a company that have an average price of 360, was down at 120. We're all feeling good at 180 today, but it's still got to double from here just to get back to my average cost. But the potential for that is real, which didn't exist at the end of last year. Well, we could have not, I certainly could not taken another year like last year. I think we could have seen the death of an industry if somehow it would have stayed maligned. But clearly now, life has been brought back to it. And I think it's going to be across the board. Pretty much most metals, and the only caveat that I put, Daryl, and I've had it for a few years, I won't look outside of North America. And the reason is geopolitical risk now, social risk, political risk, even economic risk is so high. And we're seeing it happen in too many different places where mining companies have either run into great difficulties to bring forward production or whatever, or actually have a mine basically taken away from them. And even some places in North America, I wouldn't want to bet on California, anything going on there. But my focus is staying just in North America for safety. If one's high risk, they can look elsewhere. But for now, I just want to focus on North America.
Yeah, totally understandable. And I want to bring up, platinum as well. And so, well, first, before I go there, do you think that the longer the price of gold stays higher, or like some people don't want to get faked out, right? People don't want to, go all in, mining shares and then the price of gold craters back to 1900 or something, right? People don't want to experience that. And it seems like the longer the price stays elevated, the longer that the fundamentals continue to be strong, that it could draw more people into the equity side of
I think you're really right. You're absolutely right, Darrell. And if you weren't, I would, respectfully disagree with you. I think it would be better for us here, although I think the way silver's trading, it's going to have still a fairly big rush to $30. But let's just say somewhere's in, that 29 to 30 and gold gets to, it's 23 and change. It'd be really good, as much as people would want it every day, that it consolidated, even correct a little of that, and healthy. Because like you said, if it goes like that, like a firecracker that goes up in the air, the bottle rockets, and then poof, it's gone. It won't do us any good. But I think what you have going here is, and this is critical, and I always tell people that have played the metals, don't hope for this, because I heard it again from a few clients today. Boy, I hope the stock market crashes. That'll really give gold a lift. No, it won't. What you want the stock market to do is go sideways, go down some, but not sharply down, because you want money to be able to move and rotate. People don't want to rotate when they're getting clobbered over the head. They will rotate if they start to see something doing better, and theirs isn't too bad, but the other thing looks better. So a rotational move would be the best of all worlds. But markets don't always do what we think it's best for them. In the first half of my career, when I used to wear my moniker proudly, the Wall Street Whiz Kid, the odd time the market didn't go the way I said, it was the market's fault, not mine. But you learn sooner or later, markets do what they want to do, and they don't necessarily do what you think is best. And so, but I do think it would be healthy, and you hit on something very important, to consolidate here versus keep sharply rising. That's why the concerns that I would have, and look at some of the things that were going crazy. Look like at a Tesla. A couple of years ago, it was just parabolic, and everybody and their mother jumped on it. Even Apple's starting to roll over, and soon it'll be some of these other technologies. When they start going like this, if you're not in by now, don't get in. If you're in, you can play that musical chair thing and hope you can stay close enough to the chair that you can still sit in, and you're not the person left. But we don't want to see a parabolic move here. That would not be healthy for us.
Yes, agreed. All right, so transitioning to platinum. I am currently looking at the platinum chart, which I'm going to bring up here. And there was a lot of calls for recession, right? And many of the industrial metals were being sold off. I mean, platinum went below $900. I mean, here back last year, I mean, this was what, at 804, the lowest, $804. Now it's bounced back to 950. There was a lot of talk of fear of recession last year, and obviously, when there's recession, it hurts the industrial side of the use of these industrial metals. Um, and so, where do you see like the industrial metals going? I mean, we have copper, we have platinum, we have the platinum group metals. Um, do you see, are we out of the weeds of recession, right? Because it
Well,
seems.
I'm going to answer your platinum, and then you look for, while I'm doing it, a copper chart to bring up and show, because there's a big difference. So first of all, you should know, in the first half of my career, from the 1980s through 2000, or for a good period of time, platinum always traded at a premium to gold. So whatever the prices were, that's how much platinum had over it. But one of the things that changed here is the fact that gold became such a monetary demand worldwide, while platinum has basically gone sideways to down. Platinum would not be something that I would run to here. I mean, it's probably going to have a little bit of its day in its sun, but I don't think there's a big as argument as it is for copper. Now, copper, just so you know, a couple of days ago, I suggested, especially the clients and friends that I talk to, besides and I did note it, and I always try to do fair on Twitter. Whatever I say to people privately, I share on Twitter. But I did say the time was to take some profits in the gold bullion and move it into copper, because copper was breaking out. Uh, Bring the chart up so we can see the dates, Darrell. There you go. So as you can see, copper was basically where it always was pre-COVID, $2 to $3. And then, of course, some of the two things happened. One was the move to electrification, and the world also started to recognize that a lot of copper supplies had declined. And then, of course, recession and fears hit in 2022. Everybody started talking about recessions, and it sold off, but it never sold off to a level. In fact, if you remember, I think you and I talked, I said, I didn't really think it was going to go much below 350. I said it'd be 450 without going to 250. And what we've seen now is in recent weeks and months, we've seen the smelters in China running low. We just have very, very low supply, very difficulty to find new supply. In fact, most places in the world where big tonnage was found, the grades have shrunk so much that many argue, and if you talk to people in the mining industry itself, they say it's going to need at least $5 and probably closer to 6 before large sums of money is going to be thrown around to find huge deposits again. But in the meantime, we broke out above 4, we pulled back, and now we've broken out again. And so I believe this has 5 written all over it. I just believe it's gonna. And I really think their shares are ridiculously still priced relative to a belief of a $5 copper price. And so, and the other thing that's interesting, I think that plays, if you're as a believer like me in copper, one of your arguments would be is many of the gold producers who used to be pure gold producers have been switching over to play copper in a big way and talking about it, Barrick and others, because they recognized, that the mining opportunities in it is going to be great. There's not going to be a lot of supply out there. So I'd have to tell you, I'd have to choose very quickly copper over platinum at this point in time. I think there's a lot more bullish reasons for it.
And would you say, well, not would you say, but how do you think that the recession narrative, like, I mean, obviously the price is moving against that narrative. Like we had the huge fears we could see in July of 2022. We hit a low of $3.15. It didn't close there, but it closed at $3.23. And then now we've obviously rise back up. And so I'm just kind of wondering, are we out of the weeds of recession? I mean, we've had a lot of economists change their tune on the recession talk, and sometimes government data comes out later on, and they're saying like, oh well, we were actually in a recession in 2022, or whenever we had a big sell off in 2022. I mean, I think the fall of 2022, we had a huge sell off in in the equity markets, and so I'm just kind of wondering if we're out of the weeds with that, because that's probably like something that would cause someone to hesitate.
Sure. So, so any of us that talked about recession, we haven't come close to it yet. There were people back in 2022 swearing no later than the summer of 2023 was going to be a recession. And they pushed it back. They pushed it again this year. I think one of the things that we'll look back and all say hindsight, this massive deficit spending now, we're having 3 trillion plus deficits. This money creation, it's probably one of the things that prevented us from falling into a sharp recession at this point in time. And again, at the end of the day, the government's only going to have 2 choices because of this debt crisis. Forget all the others. It'll go to an extremely hard, 10 times worse than the depression, deflationary environment, renege on a lot of debt, try to clean house, and hopefully the next generation can live better. Or the absolute most likely choice, we can deal with much higher inflation by just printing excessive money and loosening as much as possible. And that's the avenue I think they're going to choose. And that's what I think people are already speculating on. And one of the reasons people have been buying gold and all, because dollars are going to be monetized and all of that. So I think any and all of us who thought there would be sharp recessions, big recessions, it doesn't look like that anywhere in the handwriting. Now, let me just again give you the carry, because you always need an asterisk in this business. What happens politically can play a big role in that, because there's going to be a dramatic difference on how this administration would likely go forward with a second term versus the guy that's currently leading the Republican, assuming he wins and gets in, what he's likely to do. And we really can't make a judgment on that because until we see who it is. But that will play a role in the economy. But right now, I think recession fears are mute. I think there's more likely, I don't know what you call it, no growth or whatever, but anything that was looking for a hard recession where all our friends were out of work and all that. No, that was a thought 2 years ago, but whatever reason, good or bad, it's passed us by.
Hmm. Yeah, and I actually had talked to Jim Rogers about this the other day. But with the national debt, right? We see that the U.S. federal spending, officials at 6.5 trillion. Obviously, we have close to the $2 trillion budget deficit, and there's probably some other numbers in there that isn't calculated, and this seems to be highly stimulatory in terms of like what you mentioned earlier, how we may have avoided a recession because of the amount of money that the government is spending. This is record amounts. These are record amounts. Like we haven't seen the government spend this amount of money. Historically, we can look at the charts. We can just see that the government is spending a historic amount of money, and that may have averted some more pain. I mean, we did experience some pain in the markets. I mean, especially October 22. I remember some of the tech stocks that I was looking at. Facebook was at $90, and then now it's at 400 and whatever dollars, right? Like there was a huge sell off,
Yep.
but it seems like the amount of spending has averted a lot of that pain.
The temporary, but you pay for it on the other end. That's the problem. So keep this up, because I always vision in the movie when Mr. T fights Rocky, and he just says, when he's asked what's going to happen to Rocky, and he goes, pain. That was and I don't know how you can look at this as an American and not feel pain. I mean, to understand that top left one, less than a trillion when I started in the business, and understand this. It was only 20, it was almost half only of what it is now, less than 10 years ago. In fact, in 3.5, during this 3 years of this administration, the amount of the increase of debt rivaled what it took 37 years previously to do. So you're right. There's no question that might have lessened the current recession. But all these other things have come big numbers. And what we're getting to the point now, Daryl, is that lower one down there, the unfunded debt listers. How do we start paying interest on this? If if we're going to go, according to the Congressional Budget Office, they now say we're targeting 54 trillion in actual debt in less than 10 years. Let's just say there's some growth in our income. In 2022, we had $5.3 trillion in revenue. So let's just say it gets to 6 trillion or more in revenue. We're still going to be looking at almost 50% of our income just to pay interest expense. Country can't operate, Daryl. It can't do all these other things because of that. And so if you noticed, and I'm certain because I know how you are glued to news about our industry and all, a lot of titans are coming out in these last several weeks talking about the debt and it's getting out of hand and deficits. Industrial titans, Wall Street titans, because they recognize now we're in an unsustainable path. This path cannot be sustainable. And you tell me, and maybe we'll close with this, Daryl, all the problems you and I can talk about, immigration invasion, retirement crisis, debt crisis, all of them and others, crime, whatever you want to talk about, we would hope that politicians would solve it. That's where we would hope that in Washington, two parties could go in a room, make the hard decision, and fix or attempt to fix the issues. Well, Daryl, not only do the two parties not want to talk to each other at all or be anything involved, but there's members in each party now that are splintering away from their own party. So when the you know what hits the fan, the people you would hope that could somehow attempt to fix this are incapable. That's why I have such a negative view and why I've entitled this year the year of building your ark, because you better prepare. Just as people probably laughed at Noah when he was building away and hey, no, it's sunny out. Why are you bothering with that boat? Well, right now it may not look like you need that boat, but I don't think it's that many years. I think I've used the term 3 to 5 years, but it could come earlier that you better have some sort of ark built, because if you don't, I think it's going to be far worse than anything America's ever experienced.
That's a really, really, really good. And so, just to even recap some of our earlier conversations, you talk about less is more, right? So that's one component. Not spending more than
See, you're smiling because you started to do that, right?
yeah, yes, I did.
I know you did. All right.
Less is more, for sure. And obviously owning some physical metals. I mean, these nations, these countries, central banks, they're buying the asset that is not another person's liability.
Well, yeah, and also is taxes are going to have to go up. It doesn't matter what state you're in, all of them going to have to raise it. They don't have the luxury states of a printing press, so they're going to be hard pressed to balance budgets. So a lot of services are going to decline. Taxes and fees are going to go up sharply, can only go up higher and all. And truly living a less is more. And you and I, because of our spiritual beliefs, but it, most people who get out of debt or lower it greatly, whether they're spiritually inclined or not, they all say the same thing. That's a load off my shoulders. I can finally put my head down on the pillow. And there are going to be a lot of people not in that position. And, less is more is better. And if you have children and grandchildren of age, teach them that, because they think more is the way. They think the more stuff they gather, the better off and everybody's going to like them. And that's a big lie that we all know who that comes from.
Yeah, for sure. Well, Peter, thank you for coming on. Anything you would like to share with the audience, where the audience can find you, and I know you have a channel I'll link to and everything.
Yeah, petergrandich.com is the website. There's a blog. Most of the time spent on Twitter. Have a YouTube channel where I get to put up great interviews like this. And you are just going the right way. I knew you were going to do it. I knew how you were going to restructure things. I said that there's one man that was going to do it, and I can see you already the happiness and smile in it. And it is. And call it godly. Some people don't like, they say, oh, I'm just saying that to take you, but the scripture and the greatest book ever written has more about finance than it does about the two main subjects, heaven or hell. So if that book, whether it's historical in your view or godly inspired, for some reason it lasted 2,000 years while all the books have gone, and it talks more about things about related to finance, and it doesn't have one positive verse about debt. So if you want a reason not to be in debt, what we've been told in scripture tells us why. And thank you, my brother, for having me.
Thank you, and yes, definitely applying the principles, biblical principles, and I mean the fruit of the spirit is self discipline. So that's been very helpful for me this year. I've been able to lose some weight, man. Getting my finances and my financial house in order and everything, spiritual house in order. So it's been really good. I'm feeling a lot more satisfied and fulfilled.
So let me say this to you on air. I want to say it off air. It makes me feel worthy the time taken to speak with you, to hear that that's happening in your life. I can really end this interview far more satisfied what's happening with you. Not to take away from anything from your audience and mine that will gain from what they heard about us, but to know that's happening in your life, it made me feel good, brother.
That's good, man. Appreciate you, and look forward to having you back and everything. And definitely appreciate your wisdom and guidance. So you all be sure to take heed to the information we're giving out there, the gems that we're throwing out there. The Bible says, don't throw your pearls before swan, or not swan, pigs, right? And so like, hey, you can take it or leave it, right? But this information that we're given has helped us change our lives and give us more fulfillment and purpose, and ultimately just improve our overall lifestyles and everything. So appreciate you, Peter.
Thank you, brother.
All right.